Morning to those of us in Australia, and good evening to Jenny Abramson in the United States joining us. Hello, everybody, and welcome to today's episode of Diplomacy Delivered. That is the U.S. mission in Australia's virtual public engagement program. We are so delighted this evening to be joined by Jenny Abramson, as well as participants from all across Australia and a few from New Zealand and the Pacific Islands as well. So a very diverse audience today. My name is Doug Sonic, and I am the economic counselor at the U.S. Embassy in Canberra, and I'll be your host and moderator today. Today's episode is focused on accessing venture capital to make an impact. We'll discuss how venture capital creates opportunities to grow startup businesses, and we'll talk about how impact investing can generate both social or environmental impact alongside financial returns. Entrepreneurship and investment are the very bedrock of the relationship between the United States and Australia, particularly as we grow our way out of the economic impact of COVID-19 and the economic challenges that has presented to Australia, the United States, and the entire globe. And we have a great expert today in Australia to talk with us about these issues. But first, some housekeeping notes. This is an interactive program, and we are really looking forward to your questions. Thank you to those of you who have submitted great questions in advance, and we'll get to those shortly. Our hope is that we will be able to call on those people who sent those questions in advance so that you, in your own voice, can ask them and make this a discussion. But for those who have not, if you would like to submit a question, you can either drop your question into the Q&A box or raise your hand to ask an audio question. And we will get to as many of those questions as we possibly can during the Q&A session. But now it is my pleasure to introduce Jenny Abramson, the founder and managing partner of Rethink Impact, the largest impact venture capital firm focused on inclusion that invests in female leaders using technology to help solve some of the world's most pressing problems. Jenny has previously served as CEO of Live Safe, a tech company focused on preventing school shootings and sexual assaults. She's also held leadership roles at the Washington Post, the Boston Consulting Group, DC Public Schools, and Teach for America. She's been on the cover of Forbes, on CNN, in the New York Times, and the Washington Post, and has been featured at the United Nations, the G7, and the United States Congress. And these are just a few of the reasons that Jenny was named one of Entrepreneur's 100 Powerful Women and a DC Tech Titan. She holds degrees and honors from Stanford University, Harvard Business School, and was a Fulbright Scholar at the London School of Economics. Welcome, Jenny. We are delighted to be with you today.
Thank you so much for having me. It's a real honor to be here. I would have preferred to be in person as originally planned, but this is a really nice plan B. So thank you so much to you and to everyone who's joined today.
Thank you so much. We are really just honored to have more than 100 participants logged in from all around the country and some really great questions. But I think the place to start is to ask you just a bit about how you came to start Rethink Impact. What were your motivations and what were you hoping that this venture would turn into?
Well, as you mentioned, I used to be the CEO of a tech company, and I often found myself as the only female on a given stage or in a given room, which seemed odd given that I had gone to school with terrific other women and worked with other women and started to look into the data. And what I found was that less than 3% of all venture capital dollars were going to women, despite the fact that women start in the US 40% of all businesses. And what was particularly striking to me is my own mother had run a venture capital fund 20 years earlier, investing in female entrepreneurs, and the percentage of dollars had actually gone down in 20 years, not up. So I think it was really as much a market opportunity as it was sort of doing good for the world. And similarly, I had worked as the CEO of a business that did social impact and saw that it not only didn't hurt our business, it helped us in all sorts of ways. And so I think it was the combination of the two that led me to say this is really an opportunity to do something in the venture space with venture style returns that matters.
That is very interesting to hear, both the financial opportunities that were there as well as the trends that you described. And why is it, Jenny, do you think that investing in female-led impact technology companies was the sweet spot for addressing both of those issues?
Well, it's really not just good for the world, it's good business. And the data has shown that teams with gender diversity, and frankly, all kinds of diversity, really outperform others. So, in the gender space, when you go from 0 to 30% of your leadership team being women, you actually see a 15% increase in revenue. Similarly, gender balanced teams get higher valuations. They exit on average a year faster, a PitchBook study that was done last year, and they perform 63% better financially. And so when you think about that, you have many less dollars competing to get into deals that actually have higher performance, it's a pretty good opportunity. And again, we really believe that this is less about women and more that diversity drives better teamwork, better performance in so many other ways. Similarly, in the impact space, 97+% of investors say that their impact investments are now meeting or beating their financial return targets. And so both of these are really as much business opportunities as anything else. And I think some of the impact piece relates to today's top talent wants to work at companies that make a difference in the world. And frankly, some of these problems that impact companies are solving are huge market opportunities with large margins if you're using tech to solve them. So it's really a good business, again, beyond doing good for the world.
Thank you for that, Jenny. And that certainly resonates with our experience. Though venture capital is very different from government, the value that diverse teams provide in terms of finding solutions for the pressing problems are in our experience, also just so important, as diversity is so important, and inclusion to solving those. Much of your focus has been on the United States and markets within the United States, but those companies have, even if starting in America, have gone global, many of them. So what are the top 3 things that those entrepreneurs can do to successfully go global? And I know that our entrepreneurs here across Australia are really keen to have insights into how to access those global markets.
I think the 3 things I would point to, whether you're starting in the US and going global to Australia or otherwise, or the opposite, are really focusing on problems that are large global problems. And frankly, sadly, there are many of those. Those problems, as I mentioned, have big market opportunities, and there's just endless opportunity to make money in them. I think the second is hiring diverse teams. I think if you do it from day one and you build it into your senior team in the beginning, it's much, much easier to recruit. Many more people, much more diverse talent all the way through the organization, but it starts at the top. And then I think the third is really using tech. And obviously I'm biased as a tech investor, but when you're dealing with businesses that you can leverage tech, your margins are much higher. You don't need as much capital to scale.
Fantastic. And I think that is really relevant to our audience here in Australia, given the real focus on creating the industries of the future and finding ways to increase productivity here and jobs in Australia. What advice do you have for those people listening today that are eager to turn their impactful ideas and projects to do good in the world, while at the same time creating and growing a viable, profitable business?
I think the first thing I would say is not every business or every idea is meant to be a venture-backed company. And even if it is a business, it might be a business without venture style or a nonprofit. So I think the first thing is to really know whether the idea you have to make an impact really fits into what bucket, right? Whether it's venture style capital, debt-funded businesses, or really self-funded and sort of bootstrapped, or to do the nonprofit path. And I think figuring that out is very important. And then I think once you do figure out that if you think it's a business, again, knowing which type of capital makes sense and whether it's a hockey stick type growth opportunity where you really can do the venture style returns, or whether you're a business that might need more years, which is fine. And you could be a huge business where you keep much more ownership, but you have a different type of growth path. And so I think it's figuring that out and then finding obviously the right people around the table and the right kinds of capital behind you.
Thank you for that. It's really interesting to hear about the aspects that can set companies up for success. But we're living in interesting times right now, and all of our companies are being challenged, for example, by the COVID-19 pandemic. How do events like that really change what the advice that you would give? How do you recommend or advise people that are trying to reach those goals in difficult times?
It's a great question. You know, we focus in Rethink Impact in four main sectors: healthcare and primarily non-FDA approved, sort of mental health, cognition, et cetera, education and sort of educational quality, sort of FinTech for good, and environmental sustainability. So we've been fortunate in that the very areas that the companies we invest in are tackling are areas that, or if anything, have become bigger opportunities during a time of COVID. So I think one lesson out of that is to say, focusing on areas that COVID is sort of showing problems that maybe already existed, but now have just been sort of amplified, is really important in this moment. I think the second is to think about how does your team work and what makes sense and what's going to happen in the future. And I think a lot of us have realized that working from home and having more flexibility for your workforce not only is a must right now, but actually allows you to tap into talent and resources in ways, and more diverse talent that you maybe couldn't have before. And so I think the world is going to change in terms of expectations. And I think for entrepreneurs, there's an opportunity to get funding in places where before you had to meet everyone in person, maybe you don't, maybe a Zoom works. And so I think it's sort of changing some of the norms. And I think in terms of workforces, I think we're seeing almost 70% of US-backed startups actually downsizing or leaving their office spaces altogether right now, the latest study I saw. And so what we're really seeing is a moment of change in terms of how the workforce functions. And we continue on our Twitter handle at Rethink Impact, and I do it at Abramson Jenny, to constantly try to put out resources and advice for entrepreneurs, sort of what we're seeing in this moment.
Oh, fantastic. Thank you. If I could ask you to elaborate from your perspective at Rethink Impact, this turmoil that we're seeing now in terms of the reduction in workforce that you've talked about, or in some cases, restructuring of expenses around rents and the like, as an investor, what trends should we be paying attention to here? And are we creating, efficiencies and new approaches in the midst of this turmoil?
Yeah, I mean, we're looking at a lot of trends that we were already excited about, but have just sort of accelerated. One of them is workforce and how workers are working. And that's everything from the tools like Zoom that everyone knows about now, but it is, all sorts of other tools that enable people to work from home, that allow people more flexible schedules and otherwise. We're also really excited in the education space. I think a lot of people, while they may complain that they've had their kids at home, are excited by what they've been able to experience in their kids' learning. And so I don't think that many of those are all going to jump to homeschooling, but are there hybrid models of businesses that are touching and allowing parents to be a bigger part of their kids' learning. So there's a lot around that. We invest in a company called Winnie, which is tackling the childcare crisis and helping providers of childcare better show what they're doing from a cleaning of their space and other things that parents care about now. It's almost like an Airbnb of childcare. Oh. We're seeing financial planners and others like our company Elevest. How do they talk to and educate and play a bigger role, not just in managing your money, but in coaching people in this moment? And even companies like Evidation, which is democratizing clinical trials, realizing that forever clinical trials haven't been diverse enough. because not everyone could get to hospitals. And so they were using technology people had to allow many more people in rural locations and much more diverse populations to join trials using that technology in a moment like COVID. So I think a lot of it, same thing, mental health we see as a huge opportunity right now. Our mental health businesses are having a lot of traction. So I think a lot of it is thinking about businesses that aren't just specific to COVID. This isn't just about face masks, and nothing against face mask businesses, but this is about what's a business that COVID has helped sort of put a light on, shine a light on an opportunity that already existed.
Oh, fantastic. So many of those things that you've just mentioned resonate really strongly here in Australia. The work on clinical trials really draws on a strong academic and research tradition, both of the strengths of the institutions here in Australia, but also the collaboration between US and Australian research and development teams. And so to me, that really hit home when you mentioned it. A lot of the ideas that you have talked about, a lot of the best practices that work in America are going to be things that we'll be thinking about here in Australia. But are there some that you think in particular, some lessons in particular that Australia can learn from their startup counterparts in the United States?
I don't want to pretend that somehow the US has some magic knowledge that Australia doesn't. I think that the biggest thing and trend that we're seeing is on the fundraising side is this notion that venture capitalists and others are going to have to get used to not necessarily meeting everyone. And I think that may break down the sort of over time, the sort of old patterns of pattern matching, which is essentially investing in people you already know. And so in the same way that over time, hopefully that will help more diverse communities in the US, my hope is that that will in some ways make us all closer globally, because it will give people more access, where otherwise there was a real inequality in terms of who had access to Sand Hill Road or to a certain meeting or a person. I think in the near term, there have been challenges with that. In the case of gender, we're seeing 7% or 7.3% of venture dollars in Q1 of 2019, or of deals in Q1 of 2019 were to female-led companies. And that number dropped Q1 of this year to 4%. And so we are seeing in the near term that people are sort of going back to old habits, but our hope is that this will start to change things. It'll sort of bring the world closer together.
That is a disturbing trend. But to your point, I think this is actually one of the things that we as a U.S. Embassy are really excited about with this Diplomacy Delivered episode that you are so graciously participating in, Jenny. We have a lot of people, more than 100 on the line today, many of whom haven't tuned into previous episodes. And so we're hoping that this technology and of course, the great information and insights that you've been sharing will serve as a way to build those relationships so that we can be talking to this audience going forward and trying to find ways to build on that connection, to broaden and deepen the economic relationship between Australia and the United States.
That's great.
But before, I really at this point want to start to transition to some of the questions from our audience. So let me ask just one more before we do that. And that is, what are the top ways that startups can build momentum and continue to grow through a challenge like COVID, or maybe through the discussion around inclusivity that we're having in Australia, the United States, and many countries of the world right now?
I think this is a great moment to remember that diversity drives better returns. That companies with more culturally and ethically diverse executive teams were actually 33% more likely to see better than average returns. That was a McKinsey study done not too long ago. And the more diverse companies are also most innovative companies. And I think that the world is shining a light on this opportunity in all sorts of broad ways, but specifically in the investment space, I think it's a great moment. And so I think people, as they're building their companies, it's about gender, it's about race, it's about so much, and really focusing on that, number one, as you're building from the ground up. Number two, that COVID just reminds you that solving big problems actually makes you more resistant to a downturn. And so this is a moment to ensure that your company is tackling something that is a real problem that will attract the kind of talent you want to keep and have the biggest market opportunity, and frankly, be good for the economy. And I think, really thinking about embedding your impact in your business model, not just sort of having it as a give away a percentage of your product or profit. Not that that's not good, but that's easier to strip out, but really having it embedded in the fundamental way that you make your profits.
That's exciting. And it gives me it creates so many more questions, but I feel like I've monopolized so much of your time already, and really want to give an opportunity for many of our audience to hopefully in their own voice raise their questions and create a broader dialogue here. So let's move next to questions from the audience. And because this is technology that's somewhat new to us, there may be some hiccups along the way, so I hope you'll be patient with us. But in just a moment, I will ask if we have questions from Amanda Rose, who is the founding director of Amanda Rose, Stephanie Zhou, an associate in the Sydney office of the Boston Consulting Group, and Amelia King in Melbourne, where Amelia is a trade specialist at Global Victoria. And I wanted to give them just a little bit of warning and a chance to figure out where the mute button is before we move forward. But they have submitted some excellent questions ahead of time, and we want to start there. But before I do that, I also want to invite anybody else that has questions to submit them. They can type the question into the Q&A box, and I see that many are doing that, so thank you in advance. A lot of great questions coming, Jenny. Or if they'd like to ask their question live, to please raise their hand on the Zoom function, and we will call upon you to unmute you and ask your question when we get to it in the line. So with that, I would like to now ask if Stephanie Zhou is out there. Can you join us? Are you able to unmute yourself and ask your question? Okay, we don't think she will be. So let me pass along this question. Having worked with female entrepreneurs focused on social impact, what are the unique challenges that these entrepreneurs face? What are their common strengths?
First of all, Stephanie, I think you were the person who was at BCG. I worked at BCG a number of years ago, actually in the New York office. So nice to have that connection. I think that there are a number of things that female entrepreneurs face that are somewhat unique to them. First of all, there's been some important research from a PhD named Dana Kahns out of the London School of Economics on this topic. And her research looked at differences between male and female founders when they're sort of raising funds from venture capitalists, regardless of the venture capitalist gender. And what she found is that investors tend to ask men what they call promotion questions. These are questions that really are about sort of things like, what are your milestones for targeting of the next year? Or how big can this be? And that the same investors tend to ask women prevention questions, which are things like, how are you going to handle running out of money? Or how are you going to do other things? And it's really, unsurprisingly, female founders raise less money than their male counterparts, often with the same type of business idea, but because they're sort of fielding very different questions. And so if you as a female can answer the questions in a promotion type way, apparently you can actually change the situation for yourself and turn it into a sort of positive outcome. And interestingly, when women answered with promotion answers, they raised on average 14 times more money than their counterparts who use prevention type answers. So I think what you have to realize is there is going to be bias in both male and female investors. And so it sort of becomes a tool for you to turn around a question that is very prevention oriented and turn it promotion oriented.
Thank you for that question, Stephanie, and thank you for that really insightful answer, Jenny. That is, in my mind, speaks to the importance of having you and other people in the venture capital community active around these issues and working to change that systemic approach to evaluating deals sort of one transaction at a time. Because that's the way and your discussion of chasing the returns themselves really emphasizes to us, what's going to take the industry in the way that it needs to go to affect change. Let me turn next to Amelia King in Melbourne, and we are continuing to have a bit of technical difficulty here. So my apologies, Amelia. We would love to have had you read your question, but the question submitted was, what do you think the impact of travel limitations will be for startups seeking venture capital from the United States? How will COVID-19 and the steps that our countries have taken to limit its spread impact startups?
It's an interesting question. I think there's a few trends that might happen, some of which are in conflict. So as I mentioned earlier, PitchBook just came out with a piece that showed that in terms of deals that are getting funded, women had this time last year about 7.1% of deals getting funded, female-led companies. And just this last quarter, a year later, that number had dropped to only 4.3% of deals. So that would indicate that there is something happening where people are going to traditional patterns and people they know, and maybe venture capitalists are still sort of biasing towards deals of people that they already had met before, and they're not yet all comfortable with it continues and there's no travel for some time, and the sort of reopenings based challenges that some are seeing, we may start to shift to a world where there's a lot of cash out there that venture capitalists have that they need to deploy, and where they start realizing that their own personal networks of who they already know aren't enough deals to fund. And you start to see them actually diversifying and using Zoom to connect with groups that they haven't, and starting to fund people they haven't met in person, which we're starting to hear stories about. So I'm actually hopeful that one of the benefits that will come from this moment, if the moment continues for long enough, is that it will actually make it easier, not harder, for people to get traditional venture dollars. But the jury's still out on that.
Thank you. I think we have resolved our technical issues, and now if people raise their hands online, we should be able to get them in to ask their questions. So please, if you do have a question that you would like to share live, we would love to hear in your voice your question. And we'll be keeping an eye out for hands raised. But until then, let me throw out a question from Dominique Wood, whose question is, what is the best way outside of a business plan and traditional research to validate your startup idea?
There's nothing like seeing whether someone will pay for it. So I always think that the best way to validate it is to, if it's a B2B idea, if it's a business idea, go get a pilot with a couple businesses, see what they're willing to pay, see what the user engagement numbers are. It's a great way to fundraise. It's a great way to really know whether you're onto something, is whether people will pay. And similarly, in a B2C business, if you're signed to consumers, thankfully the world now makes it easy enough for you to test that and to really get out there and drive traffic through Google and others. And so I would really say the best way to do it is to go get customers, and then see what the unit economics are, what people are willing to pay, and therefore what it would look like at scale.
Thank you. All right, I think this time we are going to be able to ask Nikita Nagesh to present her question. So fingers crossed. Nikita?
Hi, can you hear me okay, Doug?
We can hear you now, Nikita. Thank you very much.
Thanks for having me. Thanks for organizing. Jenny, I've been in the social impact startup space for a while, working with female founders and running part of accelerators. And currently my new idea I'm working on is creating a global virtual startup accelerator run by Zoom for startups working on the UN Sustainable Development Goals. So I was wondering, if you have any advice on how to get started and how to form partnerships with impact VCs and organizations globally like the UN.
First of all, I think it's a great idea. So congratulations. I think it's a wonderful opportunity to think about these connections. I think my first piece of advice would be there are so many incredible incubators and accelerators all around the world who are all trying to sort of figure out this moment and how to help their companies and get their next level of funding. So I wonder whether if there's a way to tap into those networks to really sort of build relationships and create some sort of tool or platform that allows them all to sort of get a benefit from being part of what you're creating versus starting from scratch and almost creating something that competes with them. So one idea is there something you can do that allows all of these individually and somewhat siloed incubators and accelerators to connect? Two is, I think, speaking on the topic and being out there and getting press in this moment about what you're doing and how you're doing it is a great way to both get funding for it and also to get the right connectivity. Does that help answer your question?
I think that Nikita is not on or not actively able to speak right now, but
the only other thought I would add is there are a number of associations. There's the NVCA and other venture associations that are doing work in this moment to try to think about access, and so potentially partnering with one of them may be helpful to you as well.
Excellent. Thank you, Jenny. Next, we're going to go to Sally Bird. Sally.
Hello, Doug and Jenny. Thank you so much. This is really insightful. I'm from Austrade in Australia, and I had a question, Jenny, for you about what do you see as the greatest indicators of growth for these startup companies? Have you got a top 5 things you look for, or any kind of insight into that?
Into what we look for to believe a company is going to grow?
Yeah. Yes.
Yeah. I mean, some of it's very basic. We relay revenue, right? We really want to see top line growth. In early years, getting to see 3x, 2x type growth at least, and being able to really see a pattern of a company going from, $1 million to 100 million in 3 to 5 years, and really believing the assumptions behind the model that show that, I think is important. I think early on, maybe caring less about profitability, although I think that is becoming back in vogue, so to speak. It used to be growth at all costs. And I think now people want to know that there's an opportunity if you needed to and you couldn't raise capital to be able to not, fall apart, but be able to self-fund, so to speak. I think user growth, but not just sheer numbers of users, but engagement numbers, conversion numbers, depending on the type of business, I think are important as well. So really looking at the growth on the financial side, but also on the user side, and thinking about things like ARPU, average revenue per user, is another metric that we really like to look at, depending on the business, but certainly in the direct-to-consumer businesses. So those are some of the ones that we get excited about. Obviously, in our world, we also look at impact, right? And so what's the impact that revenue is driving from a societal standpoint? We often look at the UN Sustainable Development Goals and measure it sort of along those lines, those areas.
Thank you very much, Sally. We next have a question from David Brown teed up. David.
Yeah, hi, Doug. Can you hear me?
Absolutely. Go ahead,
Okay.
David.
Yeah, Jenny, my question is, what advice do you have for Aussie founders seeking US capital at the moment when travel is restricted and usual relationship building can't take place?
Yeah, I think that in the near term, for people who were able to travel to the US, I could imagine some challenges. But for many entrepreneurs who weren't able to frequently go and do the follow-up meetings, often it requires multiple meetings, this could be a moment of opportunity. I think more and more venture capitalists are starting to realize they have to take meetings by Zoom. They have to feel like that's meeting. And that sometimes it may take a little extra relationship building through the Zoom, but I'd say if you can get the meeting by video instead of phone, that will make a big difference for the conversation. If you can get to meet multiple partners within the firm, again, by video, as opposed to just having one person lead your deal all the way through, that may be more important now than ever to have people feel comfortable getting across the line. You will see more funds putting more of their capital into companies they already are in, out of sort of, it's a caution mixed with their companies needing capital in some cases. But I think really allowing video to be a benefit could help for a lot of people who haven't been able to travel to the US much anyway.
Thank you for that, David. I have a question submitted in advance from Sean Bohannon. How have recent months affected the focus of your portfolio or focused investment sectors and industries? So what have recent events done to change your thinking?
Yeah, it's been interesting. Our companies are actually doing really interesting work that they were already doing, but I'd say it's shifted. I'll give a couple examples. We have a company called Aclima, which is essentially a Fitbit for the planet. They collect and analyze air pollutants, and they're doing amazing work with climate data. And since the quarantine, the Bay Area, as an example, has seen CO2 levels go down 40% and PM levels 50%. And so Aclima's data is actually linking higher incidence of death from COVID to communities that have higher levels of pollution. And so we're seeing a company that was already tackling environmental issues, but really connecting it to social justice issues, and that the data becomes so much more stark in this moment. And it will inform climate change policies for decades to come. And Wall Street Journal just wrote a big article on them. Another company, Spring Health, which is a next generation mental health services platform that sells mental health services through employers like the Gap, like other companies, for their employees, is helping to combat mental health crisis through virtual therapy sessions. And while they were already doing this, the ways they're doing it and how they're doing it and the kinds of access have become that much more important and innovative during COVID. And so we're seeing this, I could keep giving examples, but those are two at very different types of businesses that we're seeing in this moment. So I don't want to say taking advantage of, but really seeing this moment as an opportunity to do the work they're doing in exponentially grow, frankly.
Wow, that really resonates with a lot of the small startup companies that the embassy has been talking with here in Australia, whether it be in Sydney, Melbourne, or throughout the country. So I'm really excited about that opportunity for our entrepreneurs here. Next, I have Sophia Zoe ready to ask a question. And my apologies if we have earlier maybe mistaken or conflated two names here, but Sophia, we're really looking forward to your question.
Of course. No, apologies for the confusion before and not speaking to my question, but appreciate you answering in any case, Jenny, and for asking Doug. My question is around measuring impact and looking at the social impact space, at least in Australia. There does seem to be a clear dichotomy between strong quantified measurements of impact, for example, your UN SDGs or your ESG. And then on the other hand, you have less rigid structures that are more commonly seen with program-related investments, where you're allowing founders and entrepreneurs more flexibility to shape their definition of impact, and where you might provide capital on the basis of addressing broader themes rather than meeting specific numbers or metrics. And so, Jenny, I wonder with your work, what the pros and cons of these are, and if you have a view on what may be preferable in certain circumstances.
It's a really great question, and certainly one, my partner created the course at Stanford Business School on impact investing. And so as you might imagine, this is an area we think about not just as investors, but sort of academically as well. And I think there's a real differences of opinion in the field. And I think the answer is really it depends. So in a portfolio like ours, where we cross so many different sectors, from health to education to the environment to financial, sustainability and sort of economic empowerment, it really doesn't make sense to give everyone a one-size-fits-all and one specific metric. And sometimes what we try to do is think about a set of KPIs that are specific to the company, that are very quantifiable, because we do think quantifying them is valuable, both for the investors as well as for the entrepreneurs. And we like them to very much be correlated with business growth, because we think that will have long-term implications for success. But there might be a qualitative piece to it as well. And then we like to think about some of the sort of more universal metrics, like how many people are being served, or what's the impact. So if I gave the example before about the air quality control company, we might say how many communities have had measurements done. We have a water company that's measuring quality and quantity of water use, and now can do 14 different tests. So how many water tests have they done in the US compared to what's ever been done in the history of the country? and really looking at things that are specific to their business, and then more broadly, touch on some of these broader issues. So to us, the real answer is it's a mix that you need to do, and you also have to think about it in terms of the diversity of who you're backing. So it's not just in terms of what the problem is getting solved. We think about who can access the technology. Is it affordable, right? If it's a health solution, is it affordable and accessible? And then, of course, who are you actually backing, and what's the diversity there? So I think it's a really range and tiers that are important. Obviously, there are groups like Gears and others who are trying to become the standard. And I think it'll be interesting to see, I think in the next 5 years, that will get sorted out a great deal.
No, thank you so much for that answer, Jenny. That makes a lot of sense. And to think about it on a case-by-case basis and provide some sort of tightness and looseness in other respects as well. That makes sense. Appreciate it.
Of course.
Thanks, Sophia. I'm really glad we were able to connect you in after we resolved our technical issues there. I'm going to next turn to a question that we've taken in the chat box. I'm going to ask if Ashish Shrestha could reword the question and get it back into us just with a little bit more clarity. I'm having a little bit of trouble understanding it. But before we get back to that, I'd like to take an anonymous attendee's question. Would you encourage your portfolio companies to consider expanding to Australia? What is most attractive about Australia to US companies considering global expansion?
I try not to dictate to our companies where they do or don't go. We're looking to invest. We're investing in leaders, and leaders who we think have an eye for what the opportunity is and what makes sense. And so, for some of them, staying in one country in the beginning and getting that figured out first is important before they have the team and the resources to be traveling in others. And then we have some companies like a Change.org, which is a for-profit business we invested in, that it very much made sense for them to be all over the world pretty quickly, and other businesses. And so a lot of it depends on what the business is and whether the opportunity is a fit. But certainly it depends in most cases, but there are many cases where it does make sense. There are certain things that are maybe unique to one market, but many of the problems that our companies are solving are quite universal, right? Childcare problems are universal. Women not investing enough of their money and keeping 71% in cash is a problem. That can be applied in many places. And so I think it really depends. And in some cases, the laws are different. And so it really is business specific.
Thank you very much for that. In the process, I'm going to violate the fourth wall here and say, while we were having our technical difficulties, we had one of our computers crashed, and we lost the queue of questions, which contained some really insightful and helpful questions. So I would like to invite those people who maybe earlier in the program submitted their questions to please do so again, because we would love to be able to address those and get answers for you. And our apologies in advance for making you submit them a second time. But before we do that, let me take one more question that's already in the queue. And this is from Akinsola Adebayo. Her question to Jenny is, as an investor, what qualities and metrics do you want to see in a founder and his or her team before investing?
One of the most important questions you can ask, because the team is obviously a lot of what you're backing. People always talk about a business pivoting, and that happens all the time, right? A business that's one thing may become another, and it's really the team that and the founders that are often a stable and key force. So I think one is, who have they surrounded themselves with, right? Do they themselves have a strong background that is applicable to this problem? And in the case of impact, often it's helpful if they've experienced the challenge themselves that they're solving, or know someone that gives them a deep personal connection. There is nothing harder than being CEO of a tech company and a startup. There are so many ups and so many downs. And I think one of the benefits of an impact business is when things are challenging, there's something deeper driving you to keep going and to make it work when you're trying to solve a problem you personally deeply care about. So I think I have seen that again and again matter. I think so. It's your background, your unique positioning for this problem, who you surround yourself with. Are they different from you? Do they bring another perspective? I think, often a technology that is different, unique, can help you differentiate from others. Some sort of other way to have a moat. For some people, that is that they built up a set of customers or others that are incredibly bureaucratic and hard to get to otherwise. In other cases, it's a tech moat. But having some way to have a moat, I think it's important that if the founder or CEO isn't a great salesperson, especially in a B2B business, that they have a number two who is. It's not enough usually to just be either a scientific or a technical founder without at least someone in the top team who has a good sense on the monetization side. And we think having both is ideal. So I think about our mental health company that has a great clinical scientist and a great business person. When you couple both together, that's incredibly valuable. And then I think a level of both sense of I will make this happen no matter what, but also a level of humbleness and sort of ego in check so that you can weather various storms. And I think all of those are important.
Thank you very much. I see a really interesting question here, Jenny, from Rajesh Mathur. Are there any VC listings or groups that Australian startups should look at? And how do startups, entrepreneurs in Australia or New Zealand know whether a venture capital fund is legit and a good fit for their business?
I think if you're very early stage, I think there are a number of accelerators, whether it's Techstars or, all sorts of other incubators. If you're looking at Impact, there's Halcyon and others that are wonderful. If you're a female entrepreneur, groups like AllRaise, ALLRAISE, which I, am part of, to support female entrepreneurs. I think there are groups like the NVCA that are associations that do that. And then I think often venture capitalists on their website make pretty clear how legit they are because they'll put who are the logos of companies they're invested in. And so you can quickly see, is this a fit for me? And if you want to, you can reach out to those companies. And I think you can look at the VCs that fund your sector. I think PitchBook has a number of great resources, Crunchbase, and others. So I think those traditional ones can be great, as well as some of these other groups.
Thank you. Cherish McNamara has a really great question, and I'm excited to read this one because it's one that I've been struggling with and pondering over the last year that I've spent here in Australia. Do you have any advice for getting Americans and Australians to understand the cultural differences between the two countries, even if they are subtle? We're very similar countries, but still very different. How marketing and sales techniques work in the United States do not necessarily translate into Australia and vice versa. So how do we overcome that, that sometimes invisible but very real cultural divide?
It's a great question. In some ways, I think my biggest learning from doing a Fulbright and being in a country like, being in the UK and in London, which in many ways, same language, so many similarities, or there were cultural differences, right? And that's why these programs like this one and Fulbright and others exist, is to really help build relationships and help build understanding. And so I think to some extent it's learning from mistakes, building relationships with each other, but I also don't want to pretend I have the perfect answer to the best way to do that. I think it's mostly about relationship building and finding common connections. And then also appreciating difference, right? To the point of this conversation, that often remembering if someone has a difference or something isn't naturally sort of connected, that can be a good thing and that can be an opportunity to learn in both directions.
I think that's exactly right. And that's certainly the intention of doing a Diplomacy Delivered episode like this. And we hope to do more in the future to bring those viewpoints closer together. I have an anonymous question here, a little bit technical, but will COVID accelerate globalization in that you will consider investing in startups globally, including startups that haven't flipped up to the United States and incorporated in Delaware as a Delaware C?
I think, as I sort of mentioned before, I think that COVID could, especially if it lasts for some period of time, start to break down some barriers in terms of globalization and funding, because all of a sudden it doesn't become that much harder to meet an entrepreneur by Zoom who's 2 states away from you as it is if they're around the world, especially if they're willing to do it at unusual hours. And so I think that's where there's potentially a real opportunity. I think if people get back to work sooner, I think you'll find people go back into patterns of ultimately wanting to meet people and the in-person. But I think COVID certainly could accelerate it. I think for each fund, they have their own specific mandates about where they invest, and they've given that sort of information in their limited partner agreement to their investors. So some funds can't go outside of a certain region or have certain limits, but that doesn't mean that if this persists, that you won't see those change in next funds for people. So I think there is a real opportunity for many.
Thank you for that, Jenny. A question from Ashish Shretha, who has come back again with a little bit of an elaboration. And her question is around FinTech. We've talked a little bit about the transformation that has occurred around communications recently, but FinTech is equally disruptive and creating opportunities all over the place. What impact have you seen thus far in the US, and what kind of impact could we expect in Australia?
You know, I think there's a lot of different interesting areas of FinTech that we at least have invested in. You know, on the one hand, we invest in sort of wealth advisory groups and those that are targeting folks that have been underrepresented before, like Ellevest, tackling sort of areas for gender and others. I think there's another area around student debt, which is a big part of FinTech. We work with a company, futurefuel.io, that is helping employers and consumers directly manage their debt, put off their debt payments. And so I think what we are seeing in this moment is so many interesting opportunities, particularly around economic empowerment, and opportunities for individuals to use various tools to overcome challenges or to be empowered in this moment. Other savings tools that we're seeing that are really interesting, a rethinking of 401ks, of sort of things that in some ways have been sort of just considered table stakes. I think everything is new and an opportunity. So I think it's a really interesting sector in this moment. I think it's getting hit in some ways, just as markets go down, because a lot of FinTech businesses are tied to AUM or assets under management. But at the same time, I think it's a real opportunity.
Thank you very much, Ashisha, for that inquiry. Tiz Paritza has asked a question about whether you could suggest anything to small businesses, things that the small businesses should focus on to get to the level where they can move globally, and particularly to the United States.
I think first thinking about getting some growth and having an opportunity to get the right margins on your business, I think is really important early on before you expand. If you have a physical good or physical inventory business, it's much more challenging to expand overseas, because in some ways your success, the more successful you are, the more orders you get, depending on the payment terms, can actually lead to you needing more physical inventory to meet the orders before you're actually getting paid. And so I would just say it really depends on what your business, but in terms of tech businesses, I think high margin opportunities and getting those, I think, connecting with CEOs who are maybe a step further along than you are in other regions who have expanded, and getting their advice, and then getting investment dollars that are in both regions. So you have someone on the ground even before you have a team on the ground sometimes, who can be a guidance on whether it's the cultural differences that someone mentioned earlier or anything else. And then obviously thinking about where it makes sense to expand in terms of currency risk and otherwise.
Fantastic. Well, I'm afraid that we are getting very close to the end of our session, and I'm just in such awe of the creativity and depth of knowledge that our audience has brought to the questions, and also, Jenny, to you for the comprehensive and really helpful answers that you have provided over the course of the last 58 minutes. But unfortunately, I think we're going to have to wrap up our questions now. And with apologies to those people that still had questions in the queue, we tried to group them together around theme, and we tried to avoid the more specific and esoteric questions about particular circumstances. But I'm really impressed and appreciative of the thoughts that people have shared with us here this morning in Australia and this evening in the United States. This has been a really insightful discussion, and I have been so inspired by some of the important ideas raised here today during the conversation. I'm reminded that the strength of the US-Australia economic relationship is built on shared values, including a solid foundation of entrepreneurism and investment, and that foundation, is going to really serve us well going forward to create the economic growth, generate employment, and build the productivity that both Australia and the United States need to create jobs and secure economic futures in our country. And so I want, with sincere thanks, to express my and the appreciation of all our audience, including those of us here at the U.S. Embassy, to Jenny for being with us today.
And I just want to thank you all so much for having me. The questions were incredibly insightful. And I would just say, I'm available on Twitter at Abramson Jenny and at Rethink Impact, and we'll continue to try to put out resources that this conversation has inspired and that seem relevant to this group. So hopefully that's helpful as I run across things. But really, thank you for the time. It's an honor to be part of this.
Well, we had hoped that this would be in person, and while we weren't able to make that happen in the time of COVID, it is our deepest and most sincere hope that we might be able to do this in the not too distant future with you here in Australia, to meet face-to-face many of the people that were part of this discussion today.
I would love that.
That'd be great. And we'll look forward to following you on Twitter at Abramson Jenny. And of course, we would invite all of you in the audience to follow us at USA Embassy in Oz, OZ, because we will also be putting up information that we would like to get out to you. And as I said before, we really are trying to forge a relationship with the audience and those of you listening today around these issues. There'll be more opportunities to talk about some of these things and other related issues. So until then, thank you, Jenny. Thank you to Chelsea Morris for her assistance in facilitating this program, as well as Jennifer Phillips and the State Department's Bureau of Educational and Cultural Affairs for supporting this initiative, and our fantastic team here at the U.S. Embassy for making it possible. The public diplomacy team is top-notch and doing great work, and we really appreciate that. So Jenny, again, huge thank you, and we hope to talk to you again soon and in person. Have a wonderful evening, and thank you for your time.
Look forward to being in person soon.
All right. Good night. Bye-bye.